delve into the black hole of 9, unleash the 9 energy jumps. Today, channeler of Lyran light beings, KT, touched by Lyran light, cracks the code to market volatility. He unveils the hidden 369 mystery, mapping explosive energy shifts days in advance, the very forces that buffet major investment firms with beams of 89. Fueled by Lyran wisdom gleaned in higher conscious states, KT reveals how moon rotations overlay these energy gaps, pinpointing previously unseen volatility points. Master these 9 energy jumps, seize profound trading opportunities, and ascend to professional mastery.
Welcome, friends and traders. Let's talk about this conditions in energy space where we can see the jumps of energy as controlled by the apex of 9. 369 numbers are controlling the other numbers like 1, 2, 4, 5, 7, 8, and then rotation keeps on going, and that creates the infinite energy grids as well. And controlling this movement is the triangle of 3, 6, and 9. Once there is a convergence towards the apex of 9, we see there are random shifts in the market expose themselves through expanded volatility, which can also mean expanded ranges, and also it can be a turning point, a major turning point, and you get these once a day, sometimes twice a day. So let's start from that point. Now, how to set this up is very, very challenging, because you need to understand, first of all, the overlay of and relationship of 3 and 4. 3 is connected to 4. We haven't ever talked about it, but 3 is connected to 4. Why? Because 3 plus 4 is 7, and you split the 7. The number we want to deal with is 3 and 4. Why 4? Because 4 is the core number in the sequence of hidden sequences of 8. 3 is the core of 369. So we need to bind these two numbers together through the reflection convergence. So how does this happen? If you think about a sphere, right, and there's a ball which is bouncing. As it is bouncing inside the sphere, it is tracing the path. So you can think about this, that there is a ball which is bouncing in some sphere which is not known and seen in 2D space. Alright, that's the best way to explain it. Since we bind 3 and 4, so we are trying to look into visible and invisible sequencing. By invisible through 369, visible with other numbers 1, 2, 4, 5, 7, and 8. Alright. So having said all this, how do we put it together? So we freeze the frame of the chart with one frequency, and then we look at the other frequencies and we do overlay. Alright, so this is a frozen frequency chart of 3. Through the lens of 4, other numbers are kept open and they are allowed to rotate in the market. What does this all come down to is we want to look into the total jumps and gaps, right, where we are shifting from 369 to other numbers to 369, 369 to other numbers. So we are doing this flip-flop and we're catching those turning points. All right. So what's happening here on the chart, we're looking at actually where we see this has gone down to extremely 0 point. All right, so let me mark those. Right here. Next one is right here. Next one is right here. Next one is right here. So you can see all the tops and bottoms and tops and bottoms are going to be in this area right here. Now, how are you going to take advantage of this? Then we take the bias, because the bias is set. Once we have the bias set, we can take any location. Let's take this location and see how do we trade it. Okay, that's all. So then we go, where are we? So now there is an idea and a concept of right top and right bottom. So this oscillations on the top is giving us two things here. The top one is telling, is it the right bottom? And the bottom one is telling me, is it the right top? Good top, good bottom. When they both collide, as I showed you in the Oracle chart and other charts along daily charts, when they both come together right here, when they have both expressed themselves, we know the bottom is confirmed and the other one is saying, yes, inverted bottom is all confirming. Okay, I don't want to get too much into it, but you got this idea. This one is there, right? Okay, so this is how you read these oscillations. So we are here. Let's pick any location you want to trade. This is the natural oscillator from the Astro oscillator, right? We can do this. But now I'm looking at the bigger picture. Now this is controlled by the Aries. All right. Why Aries? Because Aries is where we start a new season. Okay, even though the equinox is 21st of March, we go with full months based on other phenomena. So we say Aries is the beginning of the year. And how do we know that is the right approach? Because again, we'll take the last quarter, all right, when it handshakes with the new year starting in March, and he will overlay these patterns, right? And he will project the yearly patterns, and he will take different shapes based on the frequencies of multiple years. That we teach all that in level 3, where we take the shapes of various frequencies from historical times and we converge these shapes, right? That's like we are doing it here. Now these shapes are converted from various overlapping frequencies of 369 and then other frequencies because of the natural grid association, and we overlay these highs and lows and we do causality and correlationship, which helps us bind the yearly structure and the shapes. All right. So going back to our original discussion, that we have this ongoing big levels which we are known to us in advance, which we are going to use for trading reasons. So I know this is going to be a major high and major low, and I know in advance, hours in advance, I'm not looking for evidence to really justify putting the capital, right? At this point. This is where we take this lens and we zoom into it. And how do we do zooming? And this is a zoom in. So this oscillation tells us, for example, this is a perfect bottom. Right? 50 points, you should be happy for that day. We are looking for that big move for that day. This is a good bottom, but we are in the bottom. The top is telling this is a good bottom area. Plus, obviously, we have highs and peaks and valleys we talked about. At the same time, on the left side, we have right here, this area. Right? This is the area which is also known to as the dip. So the beauty of that is we know this advance, and what I do is, look at the time, 14:37, I will show up at 14:37. If I am not doing anything else, I show up here. Okay, what's going on? Well, I know market is moving down. I know some energy shift is going to make the move, right? And we do other things like Plutos or other beams we have, and we know precisely to the tick we can get very accurate, right? If not, at least you have these rotations. Is that a good bottom? Well, you are inside the yellow lines in the top oscillator. Yes, this is a good bottom, and we know this turn is coming. So let's mark this one more time. Again, this is all commitment to higher conscious states, first of all, and using this methodology, oscillators of stochastic, MACD, rate of change, other things come later. Remember, we never drive anything from the oscillations. We refine things once we know what are we up to. All right, so here we are. Now, there it is. So this is a confirmed bottom from the top. And same thing's happening. There are two different same things happening on the right side as well. You can see very clearly, right? There we go. So what is missing here is the grid. So let's bring the rotational grid here. So let's put this rotational price. Takes a while, a little bit, a few seconds to load up. Now we have something extraordinary. See this. And what do we recommend? Trade the yellow and the red. Now this is the last stage of pulling the trigger. Now if you have Mandela coming up here, we can put Mandela, is going to give you the range. Mandela range, overlay of this. It is telling us these are the very critical points in the day energy, that big moves are coming and you better be here ready to execute. And you're already here looking at Mandela, you're looking at other things, right? You just not have to see much, nothing much to do, because hours in advance, you already analyze your situation very quickly. So this is initiative move. Let's put some Mandela here. Okay, I disabled the other one. I'll put it back again. So this is where you are. This is the Mandela lines where we are going to go long and short. Where did we put the Mandela? This is 15-minute chart. This is the guy who started all the move and is holding it. How we know he's holding it? This is the big bar right now, and this, when you get into his bar, this is where the Gann rule of 50 comes into picture. You can always do other Fibonacci retracements or whatnot, but this is the guy. He's defending his territory. He is saying, I want to go short. The war is going on between the buyers and sellers. Sellers say, I'm going to initiate a short move, and this guy says, hold on a second, I want to break up. This is the buyer and this is the seller. The war is happening. This is the inflection point. The edge of this is the inflection point of war. The territory, right? Okay, this guy is saying, you come to me, I'll push up. This guy says, you come to me inside my territory, I'm gonna push you down. So in the first move, this guy moved down into his territory. He pushed it up. This guy came and into his territory on the sell after this guy was trying to go down. Now they're both fighting inside their zones. This is 72% retracement, this is 50% retracement. Who is more powerful? Who is more powerful, my friends? The guy who has a deep retrace or who has a shallow retrace? This is a deep retrace into his territory. This guy has shown much more power. This guy is not able to push higher because if he did, he would be somewhere here. So we already have, this is a fundamental 101 on trading, which you should already be aware of. Until you're aware of all those things, you cannot come and do these things. We are talking of a different kind of conscious states of trading, right? So this is read the chart like this, right? 101. All right, so now here we are. Now we have the zone, so I'm going to just move it into your zone. Okay, so this is the zone. We know Mandela zones, and the yellow line is also there. It's telling you this is the end of, this is just a visual impact, that's all. We know this zone from this guy. All right, so I'm going to now remove the Mandela and enable the other one. I will enable this. And I will get rid of this. Okay, so we know we are coming here for rotation. So what is going on? We are now becoming a very refined trader. Leash, now go, let's tell the story again. Left side, big move is coming. Okay. From where? From the Mandela ranges. How do we refine ourselves? Well, we use this rotational prices for ES, and we want to be inside this Mandela range. We are, remember one thing very important, they are coming inside this range, is not closing, coming, not closing, not closing, not closing. So this is the beauty of this, right? They're not able to close. So this big boy, look at this huge tail. This is a buyers, right? This guy, you're coming very aggressively. You're trying to crack it, but you're not able to close it. He's not letting you close it. He's not letting you close below this. He's holding. But all this is known to us as Mandela traders. And we have this precise level, and we have this rotational. Is this a good bottom? Yes, it is. So how do we trade this? Trade the red and the yellow inside Mandela. Alright. So once you are here, you can have added some here, 25% here, 25. With the way we teach in level 1, how do you do incremental trading? 1 or 2 strikes, you are in, and average price is going to be somewhere right here. If you enter somewhere here, average is somewhere here. And you have to give some room to hide initially. Now with time, you will see. Remember, we are after this huge moves. We are not jumping from here to here. Like, okay, right? Which is okay. We can do that too. That requires a little bit of going to the next stage. So let's talk about the next stage. Now we are talking about, at this time, we are here, 130. Okay. Now let me bring up this T bars, right? The Tesla bars, the T bars, inverted T's and T. We just came with the name. You will not find anything like this in the market, but this is nothing more than looking inside the bar. I just gave it a name of T, easy to remember, the patterns, that's all, right? So 133. So what we have learned so far, is it 1:33? I don't know which time is this running on. Let's see, give me a second. Yeah, they're both on New York time, so there it is, right? Okay, so this is 1:40, so 1:33 we are looking at. Something is going to happen, so let's tell the story again, so we are on the same page here. Some change is coming at this time. Okay, so we know this. When this time comes, we are in this. All right, so what else is going on? We have this confirmation. We have peaks and valleys. We have rotation confirmation. Now we know we are in the Mandela zone. So what do we do once we get in the zone? How can we, if you want to be a tick control trader, we have to look inside the bar. So how do we look inside the bar? You have lots of softwares. This is multi-chart. It is free. You can look inside the bar. So at this time, we're looking inside the bar. The only pattern we look inside the bar is when this yellow is pinned on the extreme on the low side for long, because this is where we know they're trying to jam the sellers and lift on the other side, lift and shift. So people can see double bottom, triple bottom, right? So this is why they're flushing those stops first, which is okay. That's how it goes. A lot of people have their own models, right? They are looking at, oh, look at this double bottom. They're doing it and they're getting stopped out. That's fine. Okay, so to avoid the bigger range of losses, we look inside the bar, only in the area of interest. Otherwise, you're wasting your capital of observation, because these symbols are going to be all over. So this is a T, right? T on the top. This is inverted T. So what are we looking for? We're looking for this flush of this red. See this imbalance, reds. They're hitting. There's an imbalance between left side, right side, right? When you see all these reds are gone, see they're hitting it, all flush. We need to make this disappear. So what happens first? It'll go and settle down. So it is settling down. There's still a lot of reds, still lots of reds at the bottom. Now you see this is some greens are coming. They are professional traders are looking at this using their professional tools, but we can see them. This is after the fact prints. See, this somebody took a big position here. If you group it all together, right? Group it all together, you can see this redness is disappearing and greens are coming in. So they are trying to position themselves, big players, right? And they will not just do it in one take. They're rotating and they're getting more contracts. Okay, and then if you've taken this long, hiding behind here, right, you probably are breaking even with one contract. Okay, you got stopped out, no worries. But now you see there's more reds, greens. The fight is going on for rotation. But we are only observing this at the point of trading interest. And what are we looking for is this yellow pins on the bottom. This is a value area inside the bar, pins at the bottom. And we want to hide behind the bottom. It's all in the middle. It's happening. We did it correctly here. This is also good. Last 25%, the value has been compressed. This is what you can see this, right? This is what professionals are looking at. They saw this, market came back into this, they went long. You can just see it. They're looking for this, hiding behind it, right? And they're trying to break it up. And they got some ticks. They're 100 lot traders, they got some ticks out of it, right? 3-4 points and ticks, they're out. But there are big banks who have 5,000 contracts. They want to get 6,000, 4,000 contracts. They will do this through quite a bit of rotation. Here is, we see this, right? If you keep adding all those things coming up, they are accumulating. accumulating. All right, and then we also talked about in the prior video about this guy. Big move is coming. Look at the oscillator. This is a swing oscillator on a bid-ask accumulation. So this is where. So now where is the second opportunity? Well, see a big guy, and this is at the bottom. Now see this big print came. This is the biggest print came here. If you watch it, see this. This was a good one to hide behind it. Okay, no problems. Some good prints are coming. Now we went down, one level down, and there it is. All happening in this Mandela range. So now we are in the middle of the Mandela range, right? You have multiple screens. You can see all this very quickly, easily. And all right, there it is. Comes down. And this value has moved down, and there's a guy hiding behind it, right? So now we are watching this. And we know I will go, and it's going to come back perfectly to the tick right here. Let me just mark this area. So you may be getting stopped out once, no worries, right? And there it goes, never to be seen back. And it all started with one simple idea of shift of energy first. We know those areas. And then as a energy trader, we have this sophisticated profiling and levels as well. So this is 15-minute chart. This is 3-minute chart. This is 1 hour chart on the left side. We know these big levels where they are rotating. Remember, nothing happens in 369 world without shift of energy. So we are already aware market is holding. It held it, right? So this is our area. If not here, we will trade here. If not here, we will trade here. So these are hourly big range rotational ideas. All right. Then we go to 30 minutes. What do we have here? We have the contract tracker on the buy right here. So we have contract rotation oscillator on 30 minutes, 1 hour at a very large 60-point differentials. Now we're going to go to 15 minutes on the right side. What do we see? We see at this point we are on beautiful levels. Now you have to have a couple of screens to really see, and your brain looks into picture, right? 1 second, 5 second, boom. You see the same thing over and over and over, and then you get the level of confidence. Now what are these lines? These are rotational flip lines. So instead of going and looking inside the bar, when we are at the level, this is where I'm looking for convergence, right? Market came down. I'm looking at this and I'm taking pictures only. 1 second look, I know what's going on, right? Well, I want to go long and short. 10 second look, I make my analysis. Watching 3 screens, you're good to go. If I get a little confused, I go to 4 screens and I say, okay, let me look into a higher picture, right? That's all there is to analysis. So now here it is, looking at going long here, oscillator says, going long here, oscillator says, right? We can go long. And now we go to 3-minute chart. So this peak which happened in 1 bar is basically 5 bars coming into this. And what we say in this oscillator of interest, that let the price move. It will try 1 time, 2 time, 3 time. This is a 1 extreme push down, 2nd extreme push down. This is also color coded, and the 3rd extreme color push down. Let it move on the other side, you're good to go. So we already are aware of all this, what's going on, right? So we are in a perfect location on 60, ready to go long. We can start taking longs based on this polarities, flex lines. And these things are going to be your area of As you can see, this guy and this guy overlaid, right? At this point, I see overlay. I'll trust it. You can see the high precision right there without looking inside the bar. And where do we hide it? Initially, we have to hide somewhere. So hide behind the energy. Trade on energy. Hide behind energy. Enjoy the energy momentum.